Right. Welcome back. This is Blue Mark FX Pips. Another day, another dollar to bring up back much banger. Alright. So today I'm gonna go straight to the charts and see the trades that we took today in the morning after the market opened up with the gap at this point here. So basically, we'll dive into these trades that we took in the group during 9 a.m. in the morning. So it was around this point here, that I personally took the first trade. I took the second trade at this point, and the third one maybe at this point here. I'll show you and show you the strategy that I personally used in trading. I use advanced SMC and MSR in scalping strategy using 15 minute, 5 minute and entry at 1 minute. I use a zero spread broker. If you want to use my broker, the link is on bio. So let's dive into today's trade. As you can see, the market crashed towards it sold or maybe crashed. It broke structure here, and this is the order block that led to broken structure. I can see there's also a liquidity resting at this point here, which means that the market will definitely come back to this point to fill in the liquidity. So to fill in the liquidity, why? This order block is so valuable because it's kind of not mitigated, because it has the 5 gap here, and also it has the liquidity resting at this place here. So this break structure from this order block here came back to this area here, and then the market crashed. This one is, I'm using 5 minutes. This one is scalping strategy on gold. So the market crashed. After it crashed, it left behind a zone or a key level called OCL. This is an OCL. Just name it. This one is an OCL. Yeah. After there is an OCL, and also this one is also an OCL. After it dropped, it went up a bit, formed another OCL at this point here. OCL this point here. Or you can basically call it anyway, it's an OCL. The reason why this was my POI and also this also my POI, because it's a zone whereby you can see there's a fair gap at this point, and also you can see also this CD zone, it has an inducement or maybe a liquidity. An OCL is valid when it has a liquidity resting at that zone. If there's no liquidity resting at either this zone here, the OCL at this zone here, or at this zone here, then it means that the price must have or leave liquidity behind before it either mitigates the zone or the key level at that point. So me personally, I can see this one is an inducement at this point. I personally told you guys that my point of POI is only valid when it has a fair value gap First of all, when it has a favorable gap, and also an liquidity resting above the favorable gap, or maybe at the favorable gap. But the price must react away from the either the OCL or the order block. Those who use SMC and MSRNR can see about it. So personally, I took this trade after the close of this candle. This one is called a doji. I took this trade from here, targeting 5100. Stop loss was beneath it. Sorry. Is also a smart money trap at this point here, or the TS. It's called the SMT, and this one is called an apex. The farthest point is called an apex. So you might see that at that point, I personally took trade at this point here after the action of the OCL, after it stopped the inducement targeting this 51.100, and it was a 1:3 RR. Then secondly, the price then came back at the point, the same zone also, at this zone also, after again it crashed the second time. So the entry, I used the 1 minute. For the entry, I personally use 1 minute. So the price came back after it crashed again at the same exact point. So this one, I'll show you the model that I use. It's called the Quasimodo level. So using the Quasimodo level, first of all, you'll see that the price has been exhausted. You look at the line chart. You use the line chart. So at the line chart, you'll see that the price formed a change of character. But at this level, this is the Quasimodo level. This one. This is the Quasimodo level. So you can see this is the liquidity, and the price must mitigate either the Quasimodo or this farthest point. So I came back to the bar chart, and you'll personally see that the price deducted off at the Quasimodo level, leaving out the apex, or maybe it deducted off at this order block zone, or this the order flow, this one, before pumping to the upwards. I took an entry at this point here. I was personally targeting the 51 point. 100, but the price reversed back to the entry. So I was out. This trade, I was out to break even to 1:2. I showed guys the re-entry at this zone before it pumped back. It's called the break and retest. So me basically, I don't use break and retest. I use SMC to trade. So we'll go back to 5 minutes. So for the second trade, I actually didn't take any trade at this point here. So you can see that the market came. Mitigated this point. I was actually offline when this move actually happened at this point here. You can see the market came, mitigate the zone, and pumped upwards. So let me just remove this and show you how we came about it. Yeah, if you look at the line chart, you'll see there's a change of character here. It's called a breakout. Those use MS and R can relate. It's called a breakout. This point here is called a breakout. BRKT. It's called a breakout because it's formed a double bottom. So the price basically changed character at this point here. Went up, but there was no liquidity. So this was my liquidity, and this was my point of POI at this zone here. After, why was this my POI? Because the price reacted off at this order block here. The price reacted off at this order block here. You can see there's also liquidity. It swapped the liquidity, then formed a breakout, went up, then after it literally left behind the equal lows here. This one I usually call it the inducement. Why? Because there's also a fair value gap at this point here. But luckily enough, the market again crashed. It crashed to my point of fear. I thought maybe I was left behind this trade because I was offline to trade this trade here. You can see it swept before it. So it tracked off at this order block here, then went straight to 1 minute. For the reduction of at that order block there, I saw the price was consolidating here. I wanted to get more confluences at that point. So it first reacted off at this point here, but I didn't enter. So I was waiting breakout of that zone here, and also there was this one. If you look at the line chart, you'll see it more clearly. You see this, the breakout. You can see the shoulder, head, shoulder. The price broke out and it pumped out upwards. So took a trade after the retest, the break, retest, and the trend continuation. So this was my entry at this point here. I was actually targeting 5100, the same zone, but stop loss it was at this point here. So this one was 1:3 RR, but I personally closed my trade at this point here before it pumped up, because I actually saw the retracement, the pullback, but I was afraid to hold this trade, so I went out at this point here before the market pumped upwards to this, hitting my TP. Can you see gold? Actually, gold, it's kinda hectic to hold towards the TP because it can humble you so bad. Guys, gold it's actually bad. It can humble you so bad when you want to hold the trade towards the TP. So after it reached this point, you can see that in 5 minutes it tapped us at the OCI after sweeping this liquidity. After sweeping this liquidity here, after sweeping that liquidity, it tapped at the OCI, then reacted off. I don't know why I missed this trade here. I don't know why. I was actually anticipating the price to mitigate this order block here before either selling. But Monday, the Monday volume actually is so crazy. It's so crazy enough that so that it can blow your account before the week even starts at all. Yeah, that's more about it. To where the price currently is right now, my anticipation of the price, you can see that I can see the market still on some bearish move, but it reacted off at this OCL here, this key level, this key level. It reacted off at this key level, then this was the previous candle it opened, but 30 minutes it's kinda so deceiving to enter the trade, but we'll wait for more confirmation. So let me just anticipate what I was looking at in 5 minutes. If you change it in line chart, you'll see more clearly. You see that the price has broken this low, this previous low here. Causing a change of character. Messages here. This one is a Quasimodo level. This one is a Quasimodo level. I don't want these things misbehaving. Let me draw another. Quasimodo level. So the price, let me remove this one. So the price broke the recent higher high, no, the lower high, and I'm anticipating, you can see the reaction at this point. Yeah, So there's a change of character at this point. There's also an order block here, or maybe a demand zone. You can see there's a liquidity. There's a liquidity resting here. There's a liquidity. Also, this one is an OCL. Open close candle. At this point here. So yeah. To add up, I can also see there's a trend line. I see there's a trend line blackout. I don't know how to do this kind of stuff, man. It's kinda so hectic. Yeah. So me basically what I'm anticipating for a buy at either this zone, targeting 5100, if in case the price might not pump upside. So I'm waiting for the price to retrace at this zone here before buying. So this is my anticipation goal. So feel free to leave your feedback at the comment section. Also, if you want to join my group, you can comment down below and I'll add you up to my group so that I can be able to make call with the others and be able to learn more from the group also. Thank you guys for watching. Please subscribe, share and like. Guys, thank you for watching up to this point. See you guys in another episode.